All right, while the Fed battles inflation here at home, many central banks around the world are contending with their own economic woes. Joining us now for more on this, we want to bring in Wells Fargo Securities emerging markets economist Brendan McKenna. He's also the FX strategist there at Wells Fargo. Brendan, it's great to see you. So what's your takeaway from the currency moves that we've seen play out, especially over the last month? The dollar has continued its rise here. We've seen the pound plunge against the dollar, the euro crash against the dollar. What's your takeaway, and then the challenges that this poses going forward?
Well, I think the currency market reaction that we've seen over the course of this year actually makes a lot of sense to me. We've had a Fed that's been ultra hawkish as far as its stance on monetary policy and really leading the charge on higher raising interest rates and shrinking balance sheets. So I think a lot of that dollar strength that we've seen makes sense in the context of the Fed. But then I think a lot of the dollar strength also makes sense in the sense that equity markets have really plummeted over the course of this year, and the U.S. dollar is still the preeminent safe haven currency. So you're kind of getting these two-pronged effects that's really pushing the U.S. dollar stronger against many of the G10 and emerging market currencies. And as far as going forward, we expect a lot of those dynamics to continue. We think the Fed is going to continue to raise interest rates pretty aggressively. It's going to continue to aggressively shrink its balance sheet. And then, just given some of the uncertainties around the health of the global economy, equity markets should stay under some pressure in the near term here. So again, that should also lead to some dollar strength through the end of this year and probably into the early stages of 2023.
And Brendan, we're obviously seeing a lot of different central banks moving at different rates, but also when you look just within the UK, between what the Treasury is trying to do and what we're also seeing with the Bank of England also trying to balance this amid inflation. But you're still expecting a very strong dollar still into 2023. What a sort of domino effect do you think that's going to have on some of these other economies that are still trying to bring inflation down?
Well, I think the spillover effects are obviously weaker currencies internationally and abroad. And I think what that can do is certainly turn some of these foreign central banks a little bit more hawkish because a weaker currency is ultimately inflationary. So you may actually see a scenario where foreign central banks raise interest rates a little bit more than financial markets are priced for. And if that is a scenario that does unfold, I think you could probably see the same effect happening overseas that we're seeing here in the United States, in the sense that risk assets can come under a little bit more pressure as central banks raise interest rates and tighten monetary policy more aggressively. So those are just a couple of the spillover effects. Certainly housing markets abroad and home prices abroad can also come under some pressure, which also has spillover effects and wealth effects on households as well.
Brendan, let's talk a little bit more about Fed policy here. If you expect the dollar to continue to move higher, or at least stay at these levels now for a couple of months, inflation obviously still very high. How aggressive should the Fed be at its last two meetings of the year?
I think the Fed really needs to be just as aggressive as they've been over the last few meetings that they've just hosted. I think in November, I think they still need to go another 75 basis points. We're still seeing dynamics where core inflation here in the United States is still elevated and should still probably rise going forward. So I think the Fed really needs to communicate that they're doing whatever it takes to get inflation under control. And when I think about what it takes to get inflation under control, at least another 75 basis points in November makes sense. And then you're possibly looking at a situation where the Fed goes another 50, possibly even another 75 basis points in December, and probably keeps its foot on the brakes in early 2023 as well. So you could be looking at a scenario where the Fed ultimately raises interest rates up towards 5% over the next 2 to 3 quarters.
And Brendan, as we look at what we're seeing with global growth, I mean, we're seeing a lot of companies really hoping that China's going to come out of these controlled lockdowns. But you don't seem to be very optimistic about where China's headed right now. Why is that?
You're absolutely right. We're not very optimistic on the outlook for China's economy. And there's a couple of reasons for that. The first just being Chinese authorities seem to be very committed to the zero COVID policy. Anytime there's some sporadic virus outbreaks, really anywhere in any city, any province, the Chinese authorities respond with widespread lockdowns. For the time being, it looks like that policy is going to remain in place, and that should weigh on Chinese economic growth prospects. But the other dynamic is that the local real estate market in China is really quite messy and coming under a bit of pressure as well. We're seeing home prices decline for about a year now, which is a very sharp dynamic that can have compounding effects on China's economy. So With the combination of zero COVID policy commitment, a struggling real estate sector, we're potentially looking at growth somewhere in the 3% range this year, and maybe somewhere in the 4.5% range next year, which is well below historical growth rates in China.
Brendan, bringing it back here to the U.S. as we wrap it up, in order to see the dollar peak, what exactly has to happen? And I guess how long until you expect to see that come to fruition?
I think in order for the dollar to peak, you would need to see the Fed do some type of pivot on the monetary policy front. And I think what could spark that is ultimately the U.S. economy showing more severe signs of falling into recession. So I think if we start to see the labor market come under a little bit more pressure, maybe even inflation start to top out and move lower on a more sustained and persistent basis, that's something that can ultimately push the Fed to reverse course on interest rate hikes and maybe even stop shrinking the balance sheet. But I think until we get that, like I said, the dollar is likely to remain strong. But we may actually see the U.S. economy fall into recession in the second half of 2023, maybe the end of 2023. So we may actually be looking at a scenario in a year's time where the Fed does start to unwind some of those interest rate hikes and the U.S. dollar can fall into this cyclical pattern of broad depreciation against many foreign currencies.
All right, Brendan McKenna, great to get your perspective, especially after the week that we saw in the FX market. Thanks so much for joining us.